Good morning, it's Steve O'Hare from Signal Centre. Today is Tuesday, the 15th of February, and welcome to another Talking Bull show. We're going to go through the news in the markets and dive into the technicals before finishing off with a gun-to-head trade idea. So let's take a look at what's going on in the markets. So Ukraine fears continue to dominate the markets and the news. Risk conditions dominated moves Monday, with sentiment in turn influenced strongly by developments in Ukraine. Markets continue to monitor rhetoric closely, with a brief rebound in risk appetite following comments from Russia's Foreign Minister Lavrov that there was scope for diplomatic progress. So let's keep our fingers crossed for that. Biden and Johnson also stated there was a glimmer of hope for diplomacy, although tensions remained extremely high. German Chancellor Scholz stated that he expects clear steps from Russia for de-escalation and is scheduled to meet with Putin on Tuesday, amid reports there was further build-up of military forces on the border. There's also been further speculation that an attack on Ukraine is imminent. Risk conditions therefore remain fragile. Wall Street equities posted limited net losses on Monday, and global bourses overall remained on the defensive. Although we have seen overnight markets pick up. Speculation over a Chinese interest rate cut provided an element of support to risk conditions in Asia. Oil prices held close to 7-year highs, while there is further demand for precious metals. The Federal Reserve Bank rhetoric in focus. Kansas City Fed Chair President George stated that central bank had to be systematic in monetary policy and that it was always preferable to be gradual, while she did not back a really fast move to neutral rates. She did add that the Fed would have a debate, a 0.5% rate hike at the March meeting of the data demanded it. Richmond Fed President Barkin stated that it was time to normalize policy and underlying demand is strong. Given the geopolitical tensions, there was a slight dip in expectations that the Fed would opt for a 0.5% rate hike at the March meeting. And firm UK jobs data, wage inflation accelerates. The UK employment rate held at 4.1% in 3 months to December. Provisional January data was strong, with a reported increase of 108,000 in payrolls to a fresh record high. Average earnings increased 4.3% in the year to December, above expectations of 3.8%, and there was a very strong data for January single month data with an annual increase of 6.3%. The data maintained expectations that the Bank of England would push ahead with further interest rate increases, all that to look forward to. So let's take a look at the markets now. We'll start with indices, and we can see that we've had a last week posted on the FTSE, posted a shooting star candle, and this week has started off with markets taking out last week's low but rallying higher into the close. The short term, let's get an hourly chart. Excuse me. We've seen a spike higher over the last hour this morning. Prices got up to 7,610, which we saw yesterday morning. So a backup retesting this level. We've got Ichimoku cloud resistance there. So a little bit of a positive spike to the day. Let's take a look at the daily chart. We've had 3 consecutive negative days, and today we're aiming to take out that negativity with a bit of positive price action. On the DAX, we've also posted this bullish hammer candle. We got down to close to the support level at 14,837 and bounced aggressively from there yesterday, and this looks like a morning star formation, which is a positive formation and sets up further upside today. On the Dow, negativity, and this has been wiped out overnight, and we are in positive territory, so wiping out the yesterday's losses. And again, it's a bit of a bullish hammer posted yesterday, so off to a good start today and expecting further upside now. We can see that from a Fibonacci perspective, we got down to test the 50% fib retracement, went through there, stalled in front of the 61.8 and reacted higher. So a B see correction looks on the cards. Similar sort of formation. The overriding formation in Nasdaq is currently negative, but we can take a look at this morning doji star that's forming currently. Will be confirmed by our higher close today, and that should lead to further upside. So markets telling us that the UK and Russia which should hopefully de-escalate. That's how the markets are reading it. Same sort of formations in the S&P as well, bullish hammer. So looking positive on the indices. Taking a look at commodities, that's really where the action's going on. Yesterday formed a bit of a hanging man candle, and we've seen a negative start to today. So a little bit of risk coming out of the markets. Looking at the 4-hour chart, we topped out on the WTI crude oil just around $94, and we're already down to $91.50, 91.38 the low today, and the support comes in at 90.60. Below that we've got 88.12, but really looking at this previous swing high as the real pivotal level. If we can manage to close below where we're trading now, below the 91.50 mark, that will be negative for WTI crude oil. Brent crude oil, similar sort of formation, but a slightly different price, $93 level, around about there. If we can manage to close below there on a 4-hour candle, that could lead to further downside. We're looking like we're getting a MACD crossover as well on here. Gold has been positive. We've seen the run up from the sort of swing low that we tested at the end of January, down at $1,780, and we're now $100 higher. So looking pretty positive on gold. Although in the last 4 hours, we have had this candle, which is a bearish outside candle, that signifies a potential reversal in fortunes for gold. So keeping an eye on that. Cryptocurrencies, Bitcoin remains positive. We've managed to pull back from the highs at 45,860 and found support around about where we saw this confluence area of trading. So around about 41,750 to 42,000. That's where our support is, and prices looking positive at the moment, but I imagine we'll be capped by this longer term structure that seems to be holding us back at the moment. This 45.5 to 46,000 level, last week's shooting star candle, set to put an end to this mini revival that we're seeing, but trading around 44,000 currently, so on the front foot currently. Let's take a look at the FX markets. Looking at euro dollar, we saw this really strong rally yesterday. We saw this really strong rally from a couple of weeks ago, which was a bullish engulfing candle. However, pulled back last week based around the Russia-Ukraine tensions, and we seem to have stalled ever so slightly and basically trading around about last Friday's close. Let's take a look at the daily chart, and we can see we're already recaptured yesterday's losses, looking to push a little bit higher, although we have got a crossover of the MACD, so potentially this could be a short-lived rally. Let's take a look at cable. Cable has been sideways price action for a good while now, and yesterday's negativity has been wiped out also. So dollar having that pullback, and that's allowed the other majors to push higher. Resistance coming in at 135.72. Support really today around about the 135.15 level in cable. Dollar yen slightly above that 115 level. It eventually got up to 116.34. That's quite a key level, as we had that swing high from the 4th of Jan. We've now had it on the 9th of Feb, and a really sort of strong pull away from that. So dollar struggling to get above that level. That's a key level now to watch out for, 116.35. Support coming in today around about the 115, the figure level. A break below there should open up the downside again. Aussie dollar, 3 negative days, and we've taken out nearly 2 of them. Again, a morning doji star formation on the candle charts, and off to a good start today. Support coming in around about 71, the figure, and resistance really anywhere up from 72 to 72.50 on Aussie dollar. So looking pretty positive overall for the other markets. Dollar getting a little bit of a payback after the really decent run it's had recently. So gun to head trade idea. Yesterday, I was stopped out in my trade idea yesterday that was trying to sell the DAX. And I'm taking a look really at the short-term price action that we've seen. This reversal in gold, which is a little bit of a concern, and potentially oil getting the same sort of reversal. Feels like it's a little bit out now. I think I will go for gold trade idea. So over the last, let's try and break it down to a shorter time frame chart. Get some value out of the risk. Right, getting short here, 1861.54. We'll have the stop pretty tight, 10 tick stop, and looking really for a 2.5 hour risk reward. So targeting a move back down to 1836. That's just in front of the real sort of consistent resistance level that we worked on, 1834. If you remember back on the daily chart, we'll pick it up a little bit clearly. This is the 1834 level. So I'm targeting a move back to that, back into the triangle. That'll be a bearish outside candle on the daily chart if we manage to get there. So looking to get short in gold here. Quite a tight stop, 1871.54. Any volatility, and there's a good chance that could get taken out. But I've got a gun to my head. That's the theory, and we're having a little bit of fun with these trade ideas. Okay, that's about it from me. Let me just take a look at what we've got out today. Taking a look at the calendar for today. German ZEW index 10 o'clock. US producer prices 130. US New York Empire Manufacturing Index 130, and UK consumer prices tomorrow morning at 7 o'clock. Key events this week: Canada consumer prices on the 16th, along with US retail sales. So tomorrow, US Federal Reserve minutes as well tomorrow night. That could be interesting. Australia employment report coming out on Thursday. So that's it. I hope it's been informative for you today. Look forward to catching up again tomorrow.